I think the fact that we're seeing such kind of, rash moves by Musk, I think it really speaks to this idea that, oh no, things are not going well here. And we've seen in the past that when his back is up against the wall, things get really sort of hectic really fast. I think back to 2018 when he decided on a whim to tweet that, he had the funding secured to go private. We're maybe not quite to that level yet, but we are sort of approaching that level of chaos just with the amount of change happening. Some of it which is really unsettling folks within Tesla. There's really concern about this idea that he's going so far as to put aside plans for a $25,000 car and sort of, put it all on robotaxis, which he's been talking about for years, but which, Tesla really hasn't made a whole lot of progress with standing up the infrastructure it needs to do that.
Is that a bet the company type move? I listened to one of his a podcast recently. He was on it playing with the soundboard, and he was talking about bet the company type moves. Is this a bet the company type move? And how do I see that if that's the case, kind of versus the earnings that we're about to get?
Yeah, I mean, I honestly think it is in the sense that, if you think about what a company like Waymo or Cruise has done, this is not a cheap endeavor. This is not something that you can sort of, just sort of make little bets here and there. You have to hire a whole lot of people. You have to set up infrastructure to, let's say your car, gets into a position where you need it to move out of the way for some sort of emergency. I don't know that Tesla. I don't know that Tesla has, remote operators or a system to set up, to handle that. We've seen that bedevil companies like Waymo and Cruise that have raised billions and billions of dollars, and even they have had challenges with that, and they're several years into testing these self-driving cars out on the road.
So you got that, and then you got the earnings coming up. Can I ignore the earnings, therefore? What are the if we're into this kind of stuff? What are the earnings going to really tell me about what's going on in this company? I
think at this point, you almost sort of, it's a given that the earnings are not going to be good, just based on the fact that this company had really, really crummy first quarter deliveries. Nobody was expecting them to be this bad. I think the real concern for investors is, okay, so what's the plan? Are you really going to put this $25,000 car off? Are you really making this, all in on Robotaxi bet? I think, Musk has not been he's been his own worst enemy in terms of not being clear on that and sort of giving people every indication that indeed he's willing to put this $25,000 car aside and really put it all on autonomy.
You talk about the challenge around the deliveries and sales. Which part of the world is it? Because the cost cutting, it just kind of screams desperation at this point, because it's not obviously the first time. They've had multiple price cuts, and they seem to start in China and then roll them out to the US and parts of Europe. Which part of the world is looking most vulnerable to them?
I think China is the most competitive, and you hear Musk say that himself. I think that's where they brought prices down the most. I think it's also, in fairness, where they can afford to do the steepest price cuts, in the sense that their cost base there is the lowest that it is in the world. And yet, I do think that this is part of why the Robotaxi pivot is so risky. So we've seen these sort of unintended effects of slashing the heck out of your prices, what it's done to a company like Hertz. We saw the CEO essentially lose his job over it. And, that is not just something that affects, big fleet companies. That also affects your customers. What do you feel if your, Model Y that you purchased a year or two ago suddenly is worth, 30% less than you thought it was going to be? You're not a particularly happy camper, and perhaps not inclined to buy another Tesla.
How do you disentangle the broader slowdown in the EV market from the idiosyncrasies of Tesla?
It's a great question. I think, the EV market in the U.S., it's almost, entirely been a Tesla story for years now. I think that's changing. I think Tesla is still very much in control of that market. Europe is much more competitive. China is even more competitive. I do think that that's part of what's going on here, too, is that this has been a story about one company, and that is no longer the case. You have BYD really emerging in the last couple of years, and you have the sort of legacy car makers having no choice but to take EVs seriously, to try and come up with, some semblance of the valuation that Musk has achieved the last few years.
Well, the valuation is so interesting here because if I remember in 2018, it took a while for Tesla, given its massive gains, to actually be included in the S&P 500 because of the volatility clause that was built into the way indexes are made. I'm not suggesting in any way that they're going to get booted from the index. That'd be insane. But I'm curious about the read-through into the actual stock price here. Is this still a growing business that's getting more global? And is that how it's being viewed? Or are we starting to view it as kind of more fundamentally big tech and more established in that regard?
I think we've seen the Wall Street analysts sort of slowly but surely come around to this idea of, oh no, this growth company is no longer, it's run out of growth. And I think there's a concern now about, are vehicle sales actually going to drop this year? If they don't have a cheaper car on the way, are they going to drop next year? Sort of where is the bottom? And people are really struggling to get a handle on that because the new product that they do have is a really difficult to make, expensive pickup truck that is also very polarizing.